this is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of April 13th, recording this on Saturday morning, April 18th. Our Chartsarefun service has got a blog that's on Substack, chartsarefun.substack.com. The blogs are issued in the morning. So if you share your email, they're for free. You can get the blogs into your email directly, or you can just access it on the app. The YouTube site is also, something that you can access insights that we share. We believe the charts are tremendous fun, a lot of great insights. We are not registered investment advisors, so please don't use this as investment advice, but as tools, as insights or patterns that can help guide your investment decisions. So today we will start right into transportation that has been on fire, literally climbing up tremendously in the last 2 weeks. So in particular, we look at in the 13 consecutive trading days since the March 30th low. The transportation index, in particular, the Dow Jones Transportation Index, has climbed over 24%. We'll show you the key driver of that. As you can see, this is the Wikipedia page. There are 20 components in this index. This is actually the longest index in the history of investing from 1890 or so, which Charles Dow had first created this index. This was created even before the Dow Jones Industrial Average Index was created. It's price weighted. So you see these 20 different stocks that are in it. Guess what is the top holding right now because it's price weighted? It is Avis. Avis shot up tremendously. We'll show you the chart of Avis. It's got a very interesting ticker symbol called CAR. The phenomena of people, because of the government shutdowns, because of just the phenomena of travel disruptions, there's been huge demand in car rentals. And as a result, people are preferring to rent cars and then drive to their destination, then have to go through long lines at the airports and so on. So fundamentally, though, we'll talk about Avis. Fundamentally, they've had almost $1 billion of net loss. They had to take off almost write-offs close to $500 billion in their fourth quarter because of EVs. They had a ton of EVs in their balance sheet that they then decided to cut down, and that had to take losses in their fourth quarter of last year. So that's the index. It's got 20 core components. There are things such as in the airline, things such as in the trucking, in the railroads, and railroads and the marine transportation, and then delivery services like FedEx, getting you from one point to the other, like an Uber, is what the core holding of these 20 components are. So let's look at the transportation index daily chart. And what we can see here is this absolute vertical climb from an 18,000 level that was on March 30th. It climbed up to 22,562 was the high on Friday and closed right below it at 22,422. So if you measure the rate of change using a 13-day number, because there are 13 trading days since that March 30th bottom, that rate of change with the 13 parameter is 24.36%. That's larger than what we got in QQQ. QQQ had over a 16% climb in the last 13 days. S&P 500 was over 12% climb in the last 13 days. And the lagging Dow Jones Industrial Average only had a 9% climb in the last 13 days. So that was an outstanding climb. And if you look at some other interesting patterns in here, RSI is overbought, higher than it was in the past climbs that it had in February and then into December. So that shows momentum. When you have higher highs with higher highs in RSI, that's usually a bullish sign. It means there is more upside ahead. And we'll shortly explain with a longer term chart where we think this transportation average is headed. So this is not it. This is not that it's reached its top. We think there is at least another 1,000 to 1,300 points towards the target of 23,700 where this is going to be headed. So yeah, rate of change at 24%. We can see accumulation hugely climbing in the period of these last 13 days. That's bullish. When there is smart money coming in, accumulating the stock, touching higher highs in the accumulation as this move happened, that's extremely bullish. And in particular, if you look at what the fundamental drivers of transportation is doing so well, there was the New York State New York Empire State Manufacturing Index, which broadly measures manufacturing activity, had hit a huge surprise of 11. Expectation from Wall Street was a contraction, turned out to be an expansion at 11. That was a bullish news that helped the transports. There's also tremendous amount of momentum just with a lot of shipping going on with semiconductors, with AI, data center growth. Some feel that's the reason. There's also optimism of potentially rate cuts. If the inflation is going to be transitory and come down, and if the economy needs those rate cuts with a new Fed chief, there's expectation of the rate cuts promoting broad economic expansion, broadening of the economic growth, and that causes transports. They're leading. Transports in some ways are seeing that coming, is why stock market usually discounts it ahead of the actual event. So this indicates potentially maybe there's better GDP coming in the future that the transports are already beginning to discount. So then the key part is, what is the longer term chart of transports telling us? Before we go to the longer term charts, since we're on the daily charts, there's been comparisons to this kind of rate of change, this kind of sharp move happening last in 1982 and then in 1991, 1992. So let's look at those time periods. This is 1982's daily chart for the full year. We can see right here it's 1982. And we can see what happened in August of 1982 is, look at that rate of change from down from -10 in a span of 13 days. That's how the rate of change of 13. It shot up to over 20%. Very similar to what we just saw in late March 30th to to April 17th that we saw as of yesterday. So that climb was caused by a pivot from the Fed president then. It was Volcker, and he had been in a mode where he was driving interest rates higher to cut the huge inflation that we saw in the late 70s into early 80s when he pivoted at this Jackson Hole meeting. That's why August is classic Jackson Hole when that happens. He signaled that this was time to now start cutting rates. And that caused the market to start seeing economic activity start shooting up, and market always discounts things ahead of it happening. And as a result, look at the sharp climb. This time it was other fundamental factors, the Empire State Manufacturing being a huge surprise. Market was extremely pessimistic, thinking we were going to have a GDP contraction, stagflation, stagnant economy. A lot of other negative fears were there. Turned out Empire State Index printed 11. That caused a significant climb, but this is what happened in 1982. That signal from Fed Chair Volcker saying that he was from raising rates, going to start cutting rates, that signal caused this huge jump. Now, interesting enough, when this climb happened, you can see that MACD also shot up, RSI also shot up, but it didn't just fail, just one shot up and come down. It digested it for a while, then up to the next climb, digested it for a while, and up in the next climb into early December. So that spanned out over several months from that initial climb from August to September. For 3 more months, it kept climbing higher highs. RSI eventually did weaken out, and that's when that kind of pattern happens. RSI weakens out, MACD starts printing. That's when you can expect a deeper pullback. But that climb, once that initial climb came in, it continued for a while. So if you look at 1991, 1992, 2 such sharp climbs happened right in 1991. This is coming out of the recession in the 1990 period. It was a short recession, but in that 1990 period, when it came back out of the recession, the chair there was Alan Greenspan. He had interest rates were over 9%. That's when late 1990s, the cuts started coming. And in a span of a couple of years, that 9% came down to 3%. So again, 2 Federal Reserve related moves with interest rate cuts caused those sharp climbs. And look at what happened. The rate of change of the 13-day back in the first part of 1991 shot up over 20%. That's the move that we got. Then again, there was some form of a climb, higher highs, higher lows, till the point when late 1991, the Cold War with Russia, that entire thing kind of crumbled. More rate cuts came, and look at the next jump from 1150 to 1480. The next big jump came. Again, a rate of change closer to the 20%. 2 big rate of change climbs. These are short period, 13-day rate of changes. Within 13 days, that's what this measures. In the span of 13 consecutive trading days, the market, the transportation index went up close to 20% twice in 1991. And in 1982, in the month of August went up that much. And similar to what we see here, in that period from late March to mid-April, 24% rate of change in the transportation index. But then let's look at the longer term chart of the transportation index. Can it just keep climbing forever? Maybe not. So we did have that big climb in 2020. This was, of course, a COVID related climb, a lot of pent up transportation that had been frozen because of the COVID came back on, and huge climb from 6,400 to 18,000, right? Factor of 3x. Then from there, pull back to 11,900 during the 2022 market, cyclical bear market pullback. Came up to 17,000. Then again, you could call this a cup and handle, a bit too deep for a handle. Handles are usually shallower, but you could also call it a double bottom. 11,900 was the first bottom into 2025. During the tariff flow, it came at slightly higher at 12,400. From there, the breakout, if you measure 11,900 to 17,800, you're talking about 6,000, little less than 6,000, 5,900. Add that to 17,800, you get a 23,700. That's the measured upside on transportation average or transportation index. So yes, we are right now at 22,400. Seems like after the 24% climb in the last 13 days that we've come too far too fast, and maybe this is the top. I would say be careful. This is not the top. I would not short this. I would wait for it to achieve this. And with the momentum, wouldn't be surprised to see this happen over the next several weeks. We can already see MACD steeply climbing. You can see RSI. Only thing that we would watch is when this new peak comes, would RSI be a lower high from what we saw back in 2014? That was deeply overbought RSI, almost hitting close to the 90 level. Right now, RSI is at 72. Maybe it tops out at about 80 by the time we get the 23,700. That would be a bit of a negative divergence. And also look at how far it has diverged from its rising 200 period moving average. That's right now at 100 and at like 10,000, and it's going to climb up to 23,700. Right, that's right there itself is more than a double, almost close to 130% or so deviation from its rising 200 period moving average. So that means, yes, when you have extreme overbought, extreme stretched out, you do get pullbacks. At some point, this will climb. The 50 period is right now at 15,000, may climb up towards the 17, 18,000. So I wouldn't be surprised from the 23 to see a pullback to 18 would be a healthy pullback. And then the market could resume its climb to higher highs if this secular bull market, which we believe continues for 20 years, starting from 2013 to up to 2032, 33. So in that secular trend, near term, expecting a top at 23,700 or so, and then a pullback towards that 18,000 because the 50 period should get up to there by that time. And then from there, another climb to higher highs is what the transportation index could do. Now, we talked about the core 20 holdings right here. And the biggest, because it's price weighted, the biggest holding is the Avis. Avis right here is CAR. So let's look at CAR's chart. Look at that climb. This is the daily chart. Look at that vertical climb. This is like from a level at 85, it went to 493. Look at the RSI at 92, extremely overbought. Look at the MACD, how far it has climbed from where it was. This is short covering, tremendous. I think there was huge short position in the stock. Short covering did it. Also, just the fact that the bullishness in the sector, in the transportation sector itself, and it was like, fuel momentum, meme kind of trading. So yes, there is some speculative meme kind of trading. As you said, fundamentals of Avis does not look so good. They are about revenue of maybe 10 billion. They have market cap closer to 27 billion or so, but or 21 billion. And then they have a lot of debt in their balance sheet as well. They have debt north of 26 billion is what they have. So that kind of a climb in a company with just declared net loss of $1 billion and with that much of debt in their balance sheet is not a very fundamentally strong move. But the upside, if you look at the longer term chart, it is not too far from its previous COVID highs at 517, post-recovery COVID highs from 2021 at 517. We expect this to definitely test it, potentially even climb past it, because if the index, the transportation index itself, has another 1,300 points or so to climb, from 22,400 to 23,700, another 1,300 points to climb, this could mean that car, being the most weighted component of that index because of its highest price, would effectively take further climb as that comes higher. It may top out before the index climbs because the other component that will help move it up, but that's something for us to look into. Now, another key ETF. So if you had to say, well, if I have to invest in transportation, what should I do? Well, the key ETF, which is an iShares ETF, is called IYT. It's the iShares US Transportation ETF. Unlike the average, which is price weighted, which is a Dow Jones Classic, even the Dow Jones Industrial Average is price weighted. It recently had been moving because of Goldman being the highest priced and hence the highest weighted stock. In this particular case, the Dow Jones Transportation Index, Avis was the highest weighted stock because of its highest price. However, if you look at the ETF, IYT, as it says, iShares US Transportation ETF, this weighting is market cap weighted, unlike the transportation average index itself. So the ETF is market cap weighted. The biggest weight is Uber at 157 billion or so. After that is Union Pacific, maybe at 119 billion or so. FedEx is a lot lower, then Delta and Old Dominion. Delta, Old Dominion are somewhere around 40 billion or so market cap. FedEx may be something in that 50 to 60 billion. But in any case, that's the weight. 16% is Uber. Union Pacific is 15.5, 8.6 is FedEx, 4.9 is Delta. Old Dominion is similar to Delta from a market cap and hence weight at 4.77. So let's look at those charts. First, let's look at IYT's chart. Monthly chart, look at the tremendous climb, climbing higher highs, yet it has not been able to take out the February high yet. Right now, we can see it 82.77. It came and stopped right there at 81.8 or so. That said, if you look at the upside, from 66, it tested twice in 2021. It pulled back to 46, came into 69, a higher high from that 2021 in early 2024. Then it pulled back and then broke out. 46 to 69 is $23. At 23 to 69, that's 92. Guess what's happening on a near-term pattern as well? We got an 82 down to 72, back to 82. Once we break out above the 82 from this pattern, we might get a pullback. Market is stretched out. 26% or 24% rise in the span of 13 days. So there could be a pullback. But from that pullback, we expect IYT to break 82 and climb towards 92. Both from the longer term pattern here that we're seeing and from the shorter term pattern, both point to a level at 92. So we think there's upside in IYT. So then the core holding Uber, that has a beautiful positive divergence. It had a beautiful double bottom. 69 was its February low. The March low was lower than the 69 at 68.46, but that's how W-shaped double bottoms form. The tip of the W at 79. So we're looking for that breakout above 79 to confirm that breakout. 69 to $79, $10, added to 79.89. That's where we think this pattern is headed. Beautiful positive divergence. When you have the second test of the double bottom, higher low in RSI, higher low in MACD, that's how bottoms form. So this is a W-shaped double bottom. We are bullish on Uber. On if you get a chance to buy it near 73, its 50 period moving average, it would be an awesome buy. So waiting for that pullback, if you do get the pullback, if the transportation index pulls back because the market is very stretched, a nice pullback of Uber towards 73 would be a beautiful buying point from here. To break 79 and go to 89 is where we think Uber is headed. Union Pacific Railroads, look at its pattern. From a longer term, 236, pull back to 208, back to 236 to 213, higher low. Then from there, it went to 240, higher low at 218, and then the breakout. So that's a cup and handle. 236 is the left brim, 240 is the right brim, then the handle at 218 and breakout. So if you do a 208 to a 242, that's $32. Add 32 to 242, 272. That's the measured target from a longer term chart of Union Pacific, where it is right now. Right now it's at 251, about $20 more to climb. Short term, it is a bit of a cup and handle. So from that 250 to 230, 31.7, back to 251, 252, that's 20 points added to 252, 272. So shorter term and a longer term pattern, both pointing to 272 on Union Pacific. FedEx, they've had some amazing momentum. We can see the big climb in the month of February. Nice cup and handle formation. The cup is almost formed. 291 tested twice. 391, 392 tested. First was in early March. Then again, 392 was tested this week. A shallow pullback because we are stretched out would then provide a nice buying opportunity where we think from 341 to 392, you're talking about 51 points. At 51 to 392, that's roughly measured to 442, 443 is where we think FedEx is headed. So nice cup and handle here. Delta Airline, it has been in the news last week, huge momentum of American Airlines and United talking about a merger. If you talk about market share, the largest market share in the US airlines is American Airlines at 21%, close to 21%. Delta is second, close to 19%, and United is third at 18%. So if American and United merge, there's a feeling that overall that may not even get passed, but the momentum with Delta is its business is extremely well run. A nice ascending triangle is forming. And if you look at the breakout from 55 to 75 is what we saw as the high of this week. That's a $20 move from 75 to 95 is where we think Delta is headed. Another good, strong play. Finally, a trucker, which is Old Dominion Freight Line. Beautiful, similar kind of an ascending triangle. A nice base breakout here above the 212 level from 177. So 177 to 212, you're talking about roughly 35 points. 35 to 212 added 246 or 247 is where we think this could be headed. So that's the move in Old Dominion Freight Line. It's nice ascending triangle breakout. So in summary, transports are looking really, really hot, both for fundamental reasons and tremendous amount of money flowing in. So this is the transportation index, the broader 20 price-weighted index, moving out to new highs at 22,400. But we expect the upside to be 22,700 if you look at the long-term monthly chart. That's where we think it's headed. Comparing it to the 1982, huge move up from a 13-day price per movement of over 20%, and also in 1991, huge move up for 20% from the both being Federal Reserve induced. August of 1982 was Volcker indicating he was going to start cutting rates, and in the early 90s, huge rate cuts from 9% down to 3% through Alan Greenspan making those aggressive cuts. Then we have the car, the largest holding of the transportation average, which is Avis, a huge momentum play, short squeeze. We think this could have some more upside. Why? Because the transportation average has to climb. This being the biggest weight could maybe have some more climb. If you look at the longer term chart, we can see 517 is not too far from where it is at 493. That's about 24 points from where it is. It could easily test that. It could even maybe break higher highs is what we would watch out on car. We'd stay away from shorting this till the point when we start seeing some negative divergence pan out. Or like if you see even in the daily chart, there's no negative divergence right now. That's extreme overbought levels. Look at what happened last time car topped out in the month of June to July. First time you hit extreme overbought of RSI, price didn't top out there. Then RSI got weaker and weaker and weaker till the point where it hit 212, and then it tanked down. Expect something lower, similar to happen. Extreme overbought RSI, let it kind of have lower highs in RSI over a period of the next month or so, and then maybe it might be a good time to start considering shorting car. Shorts, if you're on car, I would be careful. If you have the capital, hold on to it. But right now, I would not short new positions in car. Wait for this negative divergence to happen before you start shorting, and also wait for transports to reach the 23,700 target. The other core ETF to invest in transports is IYT. We think there's decent upside measured looking at from 46 to 69, that's $23 added to 69. We're talking about a $92 move. In a short term from a 72 to 82, that's a $10 cup and handle kind of move that we can get that also measures to 92. So that's the move we see in IYT. Uber, its largest holding because of its market cap. We can see the holdings are all listed here. 16.4% is Uber. That's a beautiful W-shaped double bottom. positive divergence, a move to 89 is where we see Uber headed. If you get that pullback to 73, its 50-period moving average would be an excellent buy. Union Pacific, two key measures, both measuring to 272 from a longer-term cup and handle, and then from a shorter-term cup and handle, both going to 272. It's at 250, so not so much percent-wise upside, $20 or so from where it is right now. FedEx is on the verge of a big breakout from 340 to 390. You're talking about $50 or so, added to 392, that's 442. The handle is about to form. It has formed the cup. Wait for a pullback, shallow pullback, and then expect the breakout in FedEx. Delta, a nice ascending triangle. Once at 75 breaks, it did touch 75 and pull back towards 71. So maybe it'll come and test this rising trend line from the ascending triangle near 70. At that point, could be a good buy because we see upside towards 95 in Delta. And finally, the Old Dominion freight line, the trucker, we see upside to 246. It has already broken out in the last week, on the last day, actually, this is a daily chart. In the last couple of days, already broken out. It's near 217. If you come back and test this line, breakout line near 211, 212, then from there, see a climb to 246. Good luck investing. We'll talk to you next week. Thank you for listening.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.